Hi guys, welcome back. So, another bloody day in the market today, huh? But I guess for us it's not that scary. For one thing is that our Chinese stocks had pretty much finished majority of the fall already last year, throughout the whole year, and now the US stocks are catching up, right? So, like I said before, there is very limited room for Chinese stocks to fall, and I think they would outperform the US stocks in 2022, and right after the new year in January, we are starting to see that more and more. And also, if you have been watching my videos for the last few weeks, I have been giving warning about the risk that I see. Especially in my last video, I have shared a more detailed view on the trends of stocks in the year 2022 and share my strategy for that. I said this year is not gonna be a one-directional up market, but instead it would just mainly move up and down a lot. And at one point, we would see a bigger correction of more than 10 to 20% for the S&P 500. In that case, it means everything would follow. So before we see that big correction I have been looking forward to, my plan is to increase my cash position and increase the short-term portfolio from 20% to 50%, because I do think this year is very, very volatile, much more difficult than the last 2 years, but might be a good year for traders and very, very hard for long-term investing, because in the market where things move a lot up and down, I'm afraid it's a bit torturing for long-term holdings because it would drain out a lot of people's patience. And if you have not strong enough conviction and patience, you might end up selling in the end right before the rally, the one direction run up. So that's why I gave out my view and plan. Hopefully it can help you make an adjustment accordingly and see if you need to adapt your investing strategy for this year. With that said, I am not gonna empty my portfolio. I still have 50% in the long term, and this would change until we have a bigger correction in the US stock market, because that is the point I would buy back a lot of the long-term positions. So on Monday, it was a very quick and panicking dip, and I called out to buy the dip at the critical support, and after that, in 2 days, we had a very nice run up. Most of the stocks we grabbed were making good profit already. And after that, I have reminded several times about the resistance of the Nasdaq at the 157 level. If we can stay above, we can be back on the uptrend. And if we get rejected, it's still on a downtrend. If you are a regular follower, you know that the whole time, with every correction, I've said that the music is still on, and we need to enjoy it while it lasts. Up until now, I still think the S&P 500 is still going on an uptrend, is still healthy. But I also said that the fact that S&P 500 is up or on an uptrend does not mean for all sectors. And you can see that for the Nasdaq, the correction has already started. So during the last 2 days, my focus was mainly to remind everyone to take profit. Like yesterday morning, I notified to sell ZEPP at the market open. As you know, I have a big position in ZEPP, so I'm already very happy with the run-up for the past few days. 20-something thousand profit is enough to cover the loss for LKNCY for me. I also took profit from Pinterest yesterday morning, and I did not buy in much. The only thing I suggested was UDAO. I said I bought it because I believe that the rising interest would at least ensure the Dow Jones sector to perform okay. And also, 2022 would be a year for recovery. And because Dow Jones sector includes a lot of banking or industrial sectors, the value stocks and a lot of the companies that holds good amount of cash but suffer a lot during the COVID crash. So I do think that 2022 might be a year for the Dow Jones as well, more than the Nasdaq, at least before the US correction. Anyways, so that's why I put some of the cash into UDAO. I think this is a cash position holding for me, because if the market continues to go up, I do think Dow Jones can perform well, and if the market goes down, at least it should be able to drop less than the others, and at the worst moment when it's quite fearful, maybe I can take out of the money from UDAO and buy in the heavier dip from the other stocks that have been bigger sell-off. So that is my strategy so far. And you can see that for a day like this, a position like the Dow Jones ETF might really help you save some pain. At least it drops less than all the other sectors. And also yesterday, I suggested the short-term trade on TSM because it's reporting earnings today. And turn out today might be the only rising star among the whole tech sector. You can see that in the morning, it had a huge gap up, continue running up, at some point making a 10% increase. And even with the bad sell-off of the tech sector today, it still managed to be green, up 5% in the closing. But I also suggested to take profit in the morning already, because I think everyone knows that TSM has a good earning anyways. Last year, the whole year was about chip shortage, and TSM has a strong moat, very good fundamental. Everybody knows that. So what I worry is that the institutions take advantage of this news and sell off, and now that it has formed a shooting star, so just watch out for that. I don't know if this sell off is short term or would it last longer. But in the long term, I do think TSM is a great company. If you're trapped, you don't need to worry too much about it. It has been going sideways for a year, more than that already. So when it breaks out, it might have a strong run up once the market gets more stable. So other than the Dow Jones ETF and the TSM, I did not suggest to buy anything these few days. Yesterday morning, I was asked if it's a good choice to buy ZEPP at market open. I said, wait for a pullback, right? And you can see since the market open yesterday, it has dipped around 15% already. So watch out for the risky market. Right now, it's getting very, very tricky. Especially ZEPP has double leverage on the KWEB. So when the market is not sure, it's better to not buy in. Right now, the macro environment is very, very unclear. Even the big dogs, the big institutions are still trying to figure out how to plan their moves in the following months or weeks. So I insist right now, it's better to have some cash until the market gets more clear. So today, the market did a huge dive because the member of the Fed, Brainard, said that inflation is the top priority for the Fed to control, and that's why they would be putting more effort into pressing it down, meaning the tapering and increasing interest might be faster than what they have said throughout the whole time. For a lot of investors, we think that the Fed usually try to hold up the market and would keep a steady QE until the recovery. But recently, it seems like the Fed is changing their tone under the pressure of the high inflation. But after a week of dropping, and with such news, we see that the fear and greed index is still at neutral, not at fear yet. So this would give an extra alert. It means a lot of the investors have gotten used to this kind of news about increasing interest rates or the tapering already, and they're not afraid anymore. Even though today it was such a bad sell-off, right? Even Tesla can drop 6.7%. This is such a mega cap of $1.04 trillion market cap. The fact that it dropped 6.7%, that is 70 billion valuation. And the market is not afraid. Now, on the good side is that you can see, even though the market has been selling off so much, Nasdaq is down quite a bit, but on a day like this, the Chinese growth stocks are not dipping as hard as before, like back in 2021. Why is that? Does that mean they have hope now, like EH? On a day like this, it's even green for 0.6%, Luckin up 1.2%. Li Auto managed to be green at the closing, and Xiaopeng only down 1%. Does that mean they have hope now? Well, yes, in comparison, it is much better looking than the US growth stocks, like, for example, Cloudflare, ticker symbol NET, is down 13% today, and C Limited down 10%. Last time a Discord member asked me went to buy C Limited. I said wait for it to drop until the 170s level. At that time, it was between 190 to 200. So it seemed like 170s would be quite low, but no, it dropped to the lowest of 168. And today, another 10%. So it seems like the low on Monday is not the lowest, not the floor yet. And this is a stock just like Square that was running up so strong in last year, held by many large institutions with a steady and strong growth of over 100% plus. So why did the Chinese smaller caps or growth stocks not dipping as hard as the US growth stocks? So this would explain why the Chinese stocks are not dipping hard that much, because the smart money had moved their short position from shorting the Chinese small caps into shorting the US small caps. The US growth stocks that were not dropping last year, now it's their turn to fall. So that's why the smart money has recently been closing the short position for the Chinese small caps and move the short position into the US growth stocks. Like NIO, for example. A few weeks ago, it was still heavily shorted, but now a lot of the short position should be covering. I don't know if they would start shorting again. They might if there's more bad news coming out from China. But right now, I think the attention is more on shorting the US growth stocks because they haven't been falling too much last year. This is why I said last time, the fact that I think Hang Seng Index has most likely bottomed at 226, but it doesn't mean that we will see all rising from here on. First of all, it's gotta be the mega caps to rebound first. And if it confirms to be a reversal instead of only a rebound, then it would start to move on to the other growth stocks. And for the US growth stocks, again, what I look at is the ARK ETF, right? 2 weeks ago, I said, I think there is hope for growth stocks because I thought RK would drop to the 70s level. And then we might see a strong rebound for a lot of the growth stocks. On Monday, I thought that it dipped to 80, it should be good enough, but it seems like I'm still too optimistic. It's finally dipped to the 70s level. So maybe we are getting near to the point where we can accumulate those super oversold growth stocks again for a good rebound. Meanwhile, I do think we should look close to the stocks that have been falling less or even staying green in a down day like this, because they might have a good run after the market is more clear. And at this moment, I think the only stock I would think have bottom might be BABA. If I have to choose the only one and say that most likely it had bottom, it should be BABA, because even though the market had been very volatile for the past 1 to 2 months, BABA had not been making lower lows and even steadily, slowly climbing up. I think it's running up the most healthy recently, so I expect this to continue. So on a down day like this, I think the only thing I feel safe to hold on to might be just BABA. These 2 days, I did not plan to buy anything, but I also forgot to cancel my order on Baidu, so at the closing, forced to buy some of the Baidu, but it's okay. We'll see how it goes from here. Worst case scenario, I still have a good cash position and can use it to buy the dip if the market continues selling off. In my last video, I said lock-in had reached to the buy-in level again in the range of 7.8 to 8.5, right? And right away, it really got supported and had a good rebound of up to 14%. If you have caught the dip, congrats, and I think you can lock in some profit already, because I still consider this a rebound. Because like I said last time, the good news is that it had done good amount of dip, touching the buy-in range. But the bad thing is that it had not done a long enough correction for me. ZEPP and EH have also been very stabilized. Recently, I think for EH, it has a lot to do with the certificate coming soon. So there is a short to medium term catalyst to hold the share price from dipping more with the market correction. But at the same time, it makes me a little bit worried that the moment it announced that it got the certificate, there might be a lot of sell-off because of buy the rumor, sell the news. And I do think there are a lot of retail investors waiting to sell at that moment with the good rebound. So watch out for that. Now that's it for today. And if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.